Welcome back to the channel, everybody. Hope everybody's having a good day. Just wanted to give everybody an update on all the current news events that's going on Bitcoin and all other cryptocurrency related activities. Guys, I always want to start off by saying please hit that like and subscribe button. Starting off a newer channel, it's always hard to get it built. With your help, we can do it. So with that being said, I am not a financial advisor. Nothing I say is financial advice. I am strictly here to just bring you the news. So let's get into it. Total market cap of 266 billion with BTC dominance at 69.7%. Bitcoin having a slight loss today, bringing it down to 10,343. Ethereum with a little bump. EOS with again a little bump. EOS continuing its upward trend, up over now to $4.04, and Cardano at just over 4.5 cents. So I wanted to bring you some exciting news, as I know the markets haven't been the way that most of us Bitcoin holders or altcoin holders would like. So let's do some positive news to begin. This is basically stating that the Bitcoin price indicator may signal the next leg higher by Amkar Gabel. History looks to repeat itself in the Bitcoin market, as key indicators of bullish turn could mark the beginning of the next meteoric price rate rally. The world's most valuable cryptocurrencies price action seen over the last 8 months is very similar to the moves seen in 2015. According to Bitstamp data. For instance, the Bitcoin bear market ended near 3,100 in mid-December 2018, and prices built a base below 4,000 in the following 3 months before breaking into a bull market on April 2nd. Notably, the bear market drop ran out of steam 2 months before the 50 and 10-week moving averages confirmed a bearish crossover in February of 19. Further, the new bull market began 2 months following the confirmation of the bearish crossover. That is hardly surprising, as bearish crossovers of long durations MAs are big-time lagging indicators and often mark bear market bottoms. What's more interesting is that the previous bear market of 2014 had also run out of the steam in that run-up to the bearish crossover, and the confirmation of the crossover was followed by a bullish breakout as seen in the chart below. And this goes on to show you the indicators of how this could be similar to previous bull runs, as in hopefully the future bull run that we all have been waiting for. The bear market, which began at the end of 2013, ran out of steam at lows near 150, and in January of 2015, the 50 and 100-week MAs produced a bearish cross in April, and a bullish reveal was confirmed at the end of October 2015. Note that the bull market had stalled around 450 following a quick rise from 320 to 500 in November. The cryptocurrency resumed the bull market in the last week of May after prices rose 18% and the 50 and 100-week moving averages produced a bullish crossover. More importantly, BTC went on to hit fresh record highs above $1,200 in February of 17. As of now, BTC is trading around 10,300, having rallied from 4,000 to 13,880 in the second quarter. Essentially, the bull market has stalled in the last few weeks. With history repeating itself, there's a strong reason to believe that the bullish crossover from the 50 and 100-week moving averages, if and when confirmed, could mark the beginning of a meteoric rise well above $20,000. Currently, the 50 and 10-week moving averages are located at 6,556 and 7,168 respectively. This goes on the state disclosure. The author holds no cryptocurrency assets of the time of writing. So, what does that tell me right then in and of itself is this guy has nothing to lose by writing this, nothing to gain by writing this. He is just simply stating patterns that he's seeing. Guys, how many traders out there are always trying to build hype around it? Because number one, they're trading the coin, so the more that it goes up, they can then sell and receive their profits. This guy has nothing to gain, so I find that very interesting. One of the most interesting parts of the article in and of itself. Moving on to the next article. Sorry guys, I thought I had my articles up at the top. I was reading over them before I started with this video, so it tends to make it a little bit weird that you have to wait for it. But Bitcoin is the most extraordinary bubble of our generation, says the trader. It goes on to state that says Bitcoin is up almost 180% year to date. To some, the disbelief rally has run its course and is now time to short the market. Trade Tosser goes on to say BTC USD open shorts at 10,272. 4 unit bought at 10,322. Profit 200 pips. Time held 34 minutes. While a quick short might be profitable now, one trader believes that the rally from 3,000 to almost 14,000 is nothing but a warm-up. According to an analyst, all 4 BTC bulls were massive local bubbles. In his humble opinion, Bitcoin is the future. And an analyst says, every Bitcoin bull run has an order of magnitude. If you look at the history of every Bitcoin bull run, you'd see that every run skyrocketed by a minimum of over 340% from the previous bull cycle top. Show goes on to show April, where the price was. April of 2013, it was at 259. It went up 32,317%. November of 2013, it rose to $1,163, up 348%. And in December of 2017, it went up to 19,666, up 1,590%. Please tell me where else you can see these kinds of gains on your money. I'd love to see. Love to see. Tops of every Bitcoin bull run, and that's the source right there for Weiss Crypto for the chart below. Cole Gardner, a cryptocurrency analyst, shared this pattern when he spoke exclusively to CCN. He said each bull market topped out at a minimum of nearly 5x the previous top, and I expect that to happen again the next time around. In other words, each bull cycle has an order of magnitude, according to Mr. Gardner. He then added, each BTC bull market is more dramatic than the previous one. Cole Gardner then referred to Peter Brandt's tweet in 2017 of November to drive his point. Peter says, wow, BTC challenging upper resistance line of parabolic advance. This is the biggest bull market of my 43 years as a trader. So then it shows you right there the parabolic bull run, and it's quite fascinating. Good golly. The analyst might be on to something, because recently one of the most followed traders on Twitter, Peter Brandt, tweeted that the king of cryptocurrencies may have entered a 4th parabolic stage. He goes on to state the possibility that BTC has entered its 4th parabolic phase, and he charts it below. Raoul Paul goes on to say, if you don't have any Bitcoin, BTC, then this looks like the last time board the rocket ship. I love wedge patterns like this. They have a high probability of success. Good luck. There is a shit ton going on in macro land. Cole Gardner, the previous bull run didn't have a fraction of the institutional buy-in that the current one has. The trader is dead serious when he tweeted that the previous bull runs were massive local bubbles. That's because they were mostly funded by retail investors. This current bull run is being powered by larger institutions. They were buying the bottom late last year while retail traders were cutting their losses. And he goes on to illustrate the significance of the institutional entry. Barely anyone noticed the first bull market of 2011. The next time around in 2013, we saw real capital flow into crypto, but no media attention. In the bull market of 2017, crypto approached $1 trillion market cap with global media attention. The trader added, each more fiat inflow, more media attention. And the reports have shown that the media attention partially drives the price of the digital asset. So I'll pause it here for a few minutes for you guys to kind of dive deep into it. And it's basically just charting out Bitcoin market capitalizations in the billions of dollars. The blue is the weekly number of articles, and the purple is the Bitcoin market cap. With institutions scaling into Bitcoin, it's only a matter of time before the mainstream media catches wind. In addition to news outlets, Cole Gardner predicts that governments will start paying attention, he said. I expect governments to take notice. He also went to Twitter as he regretted using the word bubble in a tweet. The analyst wrote, "Big picture, BTC is not a bubble in any way. It's the future." Goes on to say, follow up, I regret using the word bubble in this thread, confusing the choice of words. All 4 BTC bull runs crashed 80% afterwards. All were massive local bubbles. Big picture, BTC is not a bubble in any way. In my honest opinion, it is the future. Well, I completely agree with Cole Gardner. Guys, when we have these massive Bitcoin runs, okay, what happens is there is a lot of FOMO. A lot of retailers come in and they are hearing it from their friends. Guys, Bitcoin's going up, Bitcoin's going up. And it does. It continues to grow, it continues to grow, it continues to grow. But what happens when the first sign of distress hits the market and the price goes down? Maybe 5, maybe 10%. Everybody who's into Bitcoin for the wrong reasons starts to pull their money out. This next bubble with the institutional money coming in, it's going to be completely different. Big institutions want it to go down because they want to buy all up the Bitcoin up. This next bull run is going to make, in my opinion, the 2017 bull run a joke. I think $20,000 will be laughed at years from now. I think next bull run brings us closer to the $50, $60, or $70,000 Bitcoin evaluation. What Bitcoin's valuation says about its volatility by Noel Atchison. Noel Atchison is a veteran of company analyst and CoinDesk director of research. The opinions expressed in this article are her own. She goes on to say, most of us think we understand the term volatility. We digest headlines about tense political situations around the world, and we are wary of explosive chemical compounds. Some of us have had relationships with their fair shares of ups and downs. Volatility implies sharp and unpredictable changes and usually has negative connotations. Even when it comes to financial markets, we intuitively shy away from investments that would produce wild swings in our wealth. But volatility in finance is usually misunderstood. Even the most commonly accepted calculation is often incorrectly applied. Its desirability is also confusing. Investors hate it unless it makes them money, and traders love it unless it means too high a risk premium. And a few of us understand where it comes from. Many think that it's the result of low liquidity. The intuitively makes sense. With then trading volume, a large order can push prices sharply up or down. But empirical studies show that it's actually the other way around. Volatility leads to low liquidity. Through the wider spread market makers apply to compensate the additional risk of holding a volatile asset in their inventory. The misconception also stems from our mistaken conflation of low liquidity and low volume. It is possible to have high volume and low liquidity, but that's for another post. This confusion matters in the crypto sector. Bitcoin's volatility has often been cited as a reason why it will never make a good store of value. A reliable payment token or a solid portfolio hedge. Many of us fall into the trap of assuming that as the market matures, volatility will decrease. This leads us to believe in use cases that may not ever be appropriate. It can also lead us to apply incorrect crypto asset valuation methods, portfolio weightings, and derivative strategies that could have a material impact on our bottom line. So it's worth picking apart some of the assumptions and looking at why Bitcoin's unique characteristics can help us better understand market fundamentals more broadly. It goes on to talk about changing uncertainty and how the different types of market volatility there are. there is standard deviation, there is jump diffusion models, and there is purposes and alternative calculations. And it goes on to show you the impact of how these misunderstood measures of the market can really affect someone's mindset. It goes on to say Bitcoin is one of the few assets traded in markets today, in that it does not derive its value from another asset. What's more, it is a real asset with no discernible income stream. This makes it very difficult to value. Even junior analysts can calculate the fair value of an asset that spins off cash flows or that returns a certain amount at the end of its life. Bitcoin has no cash flows, and there is no end of life, let alone an undefinable value. So, what drives the value of Bitcoin? Many theories have been put forward, some of which we describe in our report, Crypto's News Fundamental. And as the market evolves, some may rise in favor, while others get forgotten or suspended. This report goes on to show Bitcoin volatility versus other assets, and as you can see, up and down, up and down, up and down, up and down. There are some higher swings, some lower lows, but again, we are so early on. I believe truly a lot of these high swings, low swings are because people were diving in the market that had nothing to do. They looked at it as a get-rich-quick scheme, and the second that it turned negative, they got out and got back in when they thought it was going back up again. I've always stressed how early on we are, and in the next few years, I think everybody who was patient enough to wait in this market will be laughing at a $10,300 Bitcoin. Guys, never invest more than you can afford to lose. As you know, it is a volatile market sometimes. But again, do your own research, keep looking, and until next time, hodl away. To the moon we go. See ya!